What is going on YouTube? It's Brendan from Market Makers. We got a big video today. We got to look at the market action, markets rebounding after Powell. Got to talk about Powell's comments. Got to look at the hot charts in the market, including the video. I forgot to add it last video, guys, so I went ahead and added it this video. We got to cover Bitcoin because that thing's been in a body bag. Look at the DXY dropping like a rock on my screen. Before we get into all this, like and subscribe to the channel. You guys want to come trade with us, come hang out in their Discord community of 13,000 people. Check out SimpleFX or BingX. You can trade on those platforms. Download links are in the video description, and then message Lee in the Telegram when you want to join. It is free for your first month. BingX and SimpleFX have you covered. BingX is for the cryptos. All the altcoins are there. SimpleFX, you can trade everything that we show here on my videos, the equities, the commodities, bonuses available exclusively with our links, guys. And guys, our only way of communicating with you is through that Telegram. Don't respond to the WhatsApp messages that comment on some of your comments. Okay, that's definitely not us, and I don't know how to write in Chinese, so that wouldn't be me anyways. But let's go ahead and get into what Powell said, guys. Look at the DXY. This thing's dropping. So Powell went with one of the options, which was a hawkish pause. Now Powell even referenced in his what was I going to say, speech, I guess, or statement. He even referenced that the inflation data is still too hot. Unemployment's not high enough. So he gave all these bad statistics for inflation and then he pauses, right? So he paused. And then he said more than half the committee, so the majority of the committee sees two more rate hikes this year. So if he sees all this data and he thinks it's too hot, why not do the rate hike now? Well, there's a couple of reasons. One, it's political. This is all my opinion, of course. It's political. If they keep raising rates, they're worried about breaking something. If you don't think the Biden administration has people talking to the Fed saying, hey, we need the markets to stay kind of strong here. This is a pre-election year. Trust me, that's happening. And there's just the real possibility that they raise rates to the point where the market can't take it anyways, or the economy can't take it. The market and the economy obviously are segregated at this point, and it just takes time degradation for something to break. So by doing this hawkish pause, pausing the rate hikes for this month, that means they're penciling in July and September for the next two. Now, I think you'll get that July hike. Unless the data changes dramatically, you see unemployment start really shooting up, I think you'll get that July hike, okay? That's not that far away. I know George Gammon, I was watching one of his videos yesterday. He doesn't think you'll get the July hike because he went back to all the way back to the 1940s, and like 80% of the time when the Fed pauses, you get no more hikes. So is that bullish for the market? If they're pausing, it's because the economy is deteriorating. Remember, price action and the economy are two separate things, and there's a lot of FOMO still in the marketplace, guys. Now, when Powell did this hawkish pause, look what he did to the dollar. We talked about this. We got above the 618, did the pause. I mean, I think you're coming all the way back down to 101. That's where I think the dollar is going to end up bouncing back to. It's going to, of course, reflect possibly off to 786, maybe do something up here, come back down. But I think you're coming back down to 101, your base range down here, okay? So that's where I think that's going. But I know a lot of you are wondering, well, why isn't Bitcoin moving, right? Why isn't Bitcoin moving when you have the DXY deteriorating like this? Let's lay over crypto cap, the total crypto cap. You can see it's going down with the dollar, right? Yesterday or last video, 2 days ago, I showed you this, the inverse relationship, crypto at a high, dollar at a base, dollar at a base, crypto at a high. You see this back and forth, but now you have crypto going down with the dollar. Well, there's some reasons for that. You won't see them in the charts. One of those reasons is all the FUD, the SEC suing Binance, the SEC suing Coinbase. And you had, I don't know why CNBC did this. I happened to turn on CNBC to watch the Powell presser. I don't know if a lot of you did that or not. I can't stand CNBC. Bill Williams calls them can't ever be right, but or can't ever be correct. But they had this Democrat congressman on, I think Brad Sherman, and this is just minutes before Powell speaking, and they bring up crypto. He wants crypto banned. He says it's only for money launderers, drug dealers. There's no reason to have crypto. So it just reminded me, I've mentioned this before, I've had these discussions in the Discord. I used to play online poker all the time, right? You guys that are my age or older, or maybe even a little bit younger, you'll remember like Poker Stars in the US, Full Tilt Poker. That was like a big thing. I loved playing online poker when Obama got in there. Now, Obama himself didn't do anything, but he had what they did on Black Friday was they banned all the US financial companies from being able to transact with these offshore poker companies, okay? Because it was gambling. And the Democrats have to protect you from yourselves. You don't get to decide how you want to spend your money. Now, you want to go gamble on football? Oh, that's copacetic. That's great. You want to go to Vegas and gamble? You want to gamble in your various state lotteries? That's okay. But you cannot play poker online. And again, it never came from the top, not out loud. They used their enforcement arm to do it. This is the exact same thing you see with Gensler right now with the SEC. It's always the Democrats that ban how you can utilize your money, and it's always the same argument. It's money laundering, it's criminals, it doesn't need to exist. Look at all the Ponzi schemes, all these poor people getting hurt. So, my take on it is I'm very libertarian, guys. I work for my money. How I choose to invest, spend, entertain myself with my money, it's my money. And that's my take on it. But it does matter who you vote for. It's just way ahead of time. Just pay attention to what's going on because I know for some of you, probably on my channel, a very small minority, it's very important to you what lapel pin somebody's wearing to show what group they're supporting, or whether or not you can have 10 different pregnant man emojis or identify 12 different ways or 100 different ways. That may be your main topic. My main topic is money and financial freedom. So look at who you vote for because one side of the argument wants to ban crypto. And that's what brought a lot of people to this channel. And I just want you guys to be aware of that because I know people hate politics and they don't follow it as closely. And you really should this time because I think if Biden gets reelected, I don't think you'll see crypto anymore. Not that crypto's going away. They'll do the same thing they did with poker. They'll ban the banks. They'll make the Coinbases of the world not be able to transact. Maybe you can get some protection for Bitcoin, maybe not, because this Democrat congressman wants it all banned. He thinks it's all a big scam. So be aware of that, guys. All right, that's my rant. Let's look at the VIX. VIX is still at your pandemic low, and that's where you're at down here. It's just 14 spot 22. Lots of complacency in the marketplace. Quadruple witching is this Friday. So we'll see what happens when all those hedges come off the market and which way they load up. If they're loading up for puts for these quarterly options or if they're loading up for calls. Looking at Bitcoin here, guys, this fell exactly to where we've been talking about over the last few videos for those of you that have been watching. We fell back to the Wyckoff ceiling, which is not even a fib, and it's holding on it. 24,930 is the Wyckoff ceiling, 24,967. And again, in our room, guys, we shorted it up here, shorted the reentry here. This is why we shorted it. We got this great decline here in the price up here from the top. This came in, if you held this trade, a 20% move down to the bottom. So again, what I'm still thinking I want Bitcoin to do, let's pop this on the 3-day. If Bitcoin can get off the mat, because it should now, it's at the Wyckoff support series. If you lose this and you start coming down here to 23.9, you need to watch this because now you're back in the trading range and you have that volatility ability to go all the way down again, okay? But this is what I think will happen with Bitcoin is if it can get off the mat, I think you're going to come back up. The equities are rallying still and Bitcoin's not even moving. The dollar is dropping, but I want to see some type of retracement. And again, the two areas that I like are the 786, 618, 28,870, 29,825. If this just starts doing this, going sideways and looks like it might start breaking down, I may be looking to trade this here down even in this range. But in general, with everything moving up, you want to see Bitcoin move up. Macro structure here making you a very large double top on top of Wyckoff. Obviously, again, the bullish argument here would be if Bitcoin came up, started flipping all this, and really this is your trigger here, okay? You want this to break out above your previous high of 31K. That would be your trigger for more upside, but that just doesn't look likely, does it? The markets look very, very extended. If we look at this again on the 3-day, Looking at the MFI, I mean, we're coming down to a trend exhaustion signal. I mean, this still has room to go down, as you can see. This could still go down some, and that's how you could get to that 618 at 23,943. But you want to see some type of reversal come in the marketplace, and you want to see this in your momentum. Obviously, on smaller time frames, you'll see it first, but you want to see this in your momentum. You want to see it in the paper coming in the marketplace. And here on the daily on the MFI, the money flow, I mean, it's just back and forth on the median line. The negative, slightly negative bias here to the momentum, and that's where price is, guys. It's just not doing a whole lot. It's even tough for some day trades when the candles are going to be as small as they are as this one. But that's what Bitcoin's doing, guys. So just be patient is what I would advise. You may have a good buying opportunity for a scalp long if the markets continue to rise and Bitcoin falls and then starts rebounding. The markets roll over, which is my fear. If the markets top out and roll over soon and Bitcoin's down here, I mean, I think Bitcoin's going to end up coming down and just coming down lower. And then you just have this wave. You have the waves going up and down as Bitcoin descends. Okay. And remember, 15.5 was where we got to before. Back in after we made the all time high in 2021 of November, I started making videos showing my pattern that I had from the previous all-time high down to the market low at the time to the current all-time high, and it had 10.5, right? And I was telling people, hey, Bitcoin can come down to 10.5. This is at the same time other people had 250K, 200K. I'm upping my target. I think Raul Paul or whatever his name is, RuPaul, that Goldman strategist, he was talking about 500K Bitcoin, and Bitcoin fell to 15.5. It took a year, but Bitcoin fell to 15.5. Okay. So understanding the market conditions and where you are headed are key, and being patient to land big trades are key. Let's look at the S&P. S&P on my pivot pattern. We hit the pivot yesterday. We got an immediate drop on that candle after Powell, basically, all the way down to 43.52. 43.52, rebounded today at 44.13. This is significant to me because I'll show you in another chart, but this is the one fib at 44.15. This is off of our geometric trading concept here, reciprocal moves. This would be AB equals CD. I think it's Gartley's page 238 in Profits in the Stock Market. And this would also be your A equals C, like an Elliott wave theory. Okay, so this is your reciprocal move. 44.15 is key to see if this holds or if this is flipped, and then you move up even more. So we'll look at that data. And again, the pivot pattern, which this is all over. This pattern is all over Twitter now. And a couple of big channels, like a half dozen of you, keep sending me screenshots from other channels talking about a 40. I've seen it as a 42 bar, 43 bar, 44 bar, but lots of people doing this. And trust me, I'm sure I did not invent this, but I've had this for months. So it's just interesting to see this come out. And of course, we've had very high performance pivots where we captured these awesome moves. And these are pivots, guys. So you have a pivot here, means you're going the opposite direction. A 180, you go back up to your top. A 180, you go down to your bottom. A 180, you go back down to your bottom. And you can see this bottom was not on a pivot, came back up, and then you had your pivot for the 9% drop that we traded. And the last pivot was disappointing, got a 150 bar drop here that we traded in the room. And then my trade after that pumped up here to the next fib level, stopped me out. So it had a nice run of 4 or 5 S&P winners in a row, including a nice 9% drop, and got stopped out on my trade on that last one. This area is what I'm looking at next. Let's say 44.15 to whatever, 44.30. I want to see if you get some resistance up in here. And the reason being is when we look at this on another chart, you're at 44.15 right now. When you look at this at a chart, if you scroll down, let me throw on my 1272 because that's honestly the next key level. Looking at geometric fibs here, the next key level I would be looking at is 45.93, and obviously that's a big move up. So I don't think it can. I don't think it can get there. Could it get there? Sure. Are there fibs between here? You could use a one spot, 1-3. There's lots of different things you could do, different levels. But I'm looking at this level as a key level to see if the market comes up and get some wicks above. You can get this type of action here. The market comes up and starts to exhaust, because let's look at some different things here that might give us some hints. If we look at our tide, let's see where we're at. We're extended from the 21 here, the volume weighted. You can see that extension. If you get mean reversion, you're coming back down. That mean reversion would bring you down to 42.76, a cool off period. We haven't really had our pivot on top of Wyckoff here in the daily. We got above Wyckoff, got a little cup here, got another little cup, and then just started really FOMOing up. We didn't get that traditional larger move up, pull back down, retest, and then move back up again. So this is where the S&P is now. If we look at our indicators, MFI doesn't routinely get overbought here on the S&P, as you can see. So you're in the higher band here of the MFI. Momentum still looking okay. But when we let's just add a Keltner channel, and let's look at this on a 21-day trend, and you're exceeding 3 ATRs on the Keltner channel. Now, like with Bollinger Bands, you get like 97 or 99% of all of the price action within 3 standard deviations. Keltner channel uses ATR, average true range. But as you can see, set to a 3, I would say you probably have 99% of the price action within the bands too. You kissed it here, but you can see it's all the way through here. Kissed it here, right there. So really, this is extended. Okay, does it mean it has to pull back? No. What you look for is probability areas of where it should pull back. I want to see if we get a close here below 44.15, and then see if we start getting some rejections here at 44.15, because this lines up beautifully for a reciprocal move, and I would expect a cooling off period. So that range really is 44.15, and I'm looking slightly above as well. Add 20, 30 points to that, see if we can stay under psychological number 44.50, right? I want to see if we start building some type of topping action there. Come back to the mean. There's your mean in the Keltner channel, which again lines up basically the same with the tide, which is 42.76. So if it does, fantastic. I'm going to look to trade it. If it doesn't, then we're going to look to trade it as it continues to rise. Looking at the volume on the S&P, again, just another reason that I'm, overall bearish on this market. Very weak volume trend. We did this comparison last video. 58 bars, 244 days, 58 bars. You can see the volume is less than 60% of the bull run volume. And the best indicator I can show you this with, again, here's your bull run volume expressed in waves. Okay, that's that 58 bar segment. Here's your October low, and here's your bull run volume starting here. Okay, each and every wave has gotten lower and lower as you progress. And what has price done? Price has risen and risen on this 20+% rally now. Okay. So again, does this mean price can't go up? No, it can go up. What it means is your bias is going to be to make a top, not enter a new bull market. The people do not believe the Fed. I don't think the Fed's going to get 2 more rate hikes in either, but they're just buying equities, risk be damned. What does this mean for the NASDAQ? Looking at the NASDAQ, I added the sacred slice or harmonic ratio, 707 here. That's at 1591. We pumped up above here the 618. As you can see, that was at 14,581. Getting hung up here a little bit. 786 is higher up. That's at 15,544. I'm sure a lot of technicians are watching that March 2022 high, which is at 15,261. So this range again, looking to see if we get any type of topping action between 15.1 essentially and 15.5, 15.550. Okay, NASDAQ is still heated as well. Looking at this, you still got positive money flow. You have positive momentum kicking back in here on the daily time frame. Where are we at on the tide? I don't have that. Let's look at the Keltner channel here. And on the Keltner channel, you are once again exceeding 3 ATR. You're poking above it. So what that usually means, guys, is you get a retracement. The pump will stop at some point. You can come back just like you did here, okay? You exceeded the 3 ATR right here. You made a double top. You came back. You regrouped, and then you pump back up. So this is what I'm looking for here to see if this holds up somewhere in this range. Need more than one candle on the daily. Got to see how this closes. Again, tomorrow is a big day. I think Monday the market's closed. It is a new holiday that Biden signed into law. So Monday the market's closed, and so tomorrow's really the last day of trading, and you're going to see that quadruple witching tomorrow. Let's look at the Russell, guys, and I got all these stocks to go through for you. So we'll speed through this. Russell, not doing a lot. So again, last trade I gave, nice 17-18% drop. This is the range to watch in a Russell, 1901. If you threw a simple fib retracement up here, from this high here down to your low, you could see the 786 at 1941 would be another area of interest if you were able to get up there. But the Russell looks weak. It's printed a double top structure here on the daily. This is small caps. This is the broader economy. And so this is what you're seeing. You're seeing the struggle here. 1901 was where it was at when Powell was talking, and it fell down to 1858, and now it's just in between. So it's just kind of sitting there. Let's look at the indicators for this as well. Momentum's dying off, money flow's dying off back at the median line. Nothing to show you on the Russell. JPN 225, the Nick, guys. So this pumped up right to the 1.414. This is the reciprocal ratio to the sacred slice, 707, okay? 1.414, you're just above it at 33,457. I'm looking for topping action between this range, obviously in the higher part of this range now, 33,377 and 34,377. See if this holds. If this starts making accumulation to come back out and pivot back up, this is an area I want to watch. If this just starts making a distribution box, it's also an area I want to watch, especially if the other markets around the world start rolling over, because this could be a great trade to catch some of this retracement. You are very extended from the tide here, and this is on the daily time frame. So this makes sense that you're getting a pullback to cool off, and we'll see if the U.S. markets want to do the same. We have any indicators on here? Yes, we do. You can see you had some divergence here in your money flow, going back to the mean here, the median line. Still have strong momentum on the daily time frame. So got that move up. Let's go ahead and move forward. The CAC, not a lot to see. ECB raised rates today, 25 basis points. Inflation's hotter than the European Central Bank expected. ECB got to 73.59 on a 618 retracement. Came down a little bit. Again, not a lot of action. MFI below the median line. Momentum still bearish, but picking back up. So you just had a little wave. And again, this is just doing the waves as well, as you can see. Okay, so you're just waving down. Not a lot to trade here. I'm sure you can find stuff on smaller time frames. We traded it up here within $15 of the top. Very proud of that trade. And I gave the re-entry trade here as well at 75.30 for this nice move down. So it's been a nice trade, but just waiting to see what happens here. Let's look at the DAX. Remember, we went on the 3-day. So last Tuesday, or this past Tuesday in my other video, I talked about this coming up to potentially form a double top. That's where you're at now. I want to see what the DAX does here at this level. You're on top of Wyckoff. And let's see how the DAX handles this area. I think it's just about 100% retracement just on a fib retracement. You can see you hit the 100%. So if you start rolling back down, you can watch these fib levels in reverse as well. But you can always pull, if this holds up in this area and the German Bund yields were rising as well, you can always pull a fib retracement here. You can see your 618 is down here at 15,898. If I add my other fibs back, 486, 382, and you can see that. So 16,067, if this starts to retrace, 46 is right on top of Wyckoff at just about 16K. So bullish scenario, if you think this is going to go up, you'd want this to pull back, hold this area, 16K, and then pivot out, right? If it doesn't, you're getting a triple top formation. And of course, you could pivot out from up here as you technically defeated the high, but you did not close above it. So it's an area to watch, guys, but nothing I'm interested in doing exactly on the DAX. Tesla, disappointed. We have not got to my 268 target yet. Want to see if this holds as resistance or if it breaks above, or, maybe it doesn't even get there because it's at 256. So Tesla's had this meteoric rise, got some gaps in here as well. 268 spot 16 is where I want to see this go. That would give you a 76% rise after a 113% rise off of your low in January. Okay, so these are big moves. This may end up be where you're retracing, but this is my target, sticking to my plan. Want to see if we get to 268 and if it holds for resistance or slightly above and gives us some candles. But if not, this may be where it goes and stops. It all depends on what the broader markets are going to do. Let's look at NVIDIA. I'm going to do this a couple different ways. So again, because we're in price discovery, look at this gap. I mean, you have Huge gap here. Because you're in price discovery here, let's zoom in. This is a daily time frame. You're very much extending it from your tide, right? Remember, my tide is a 21 volume weighted moving average, which you guys can figure out what works best for you. Whole moving average, EMA, simple, whatever. I like the 21 volume weighted. So I'm going to do this like this. Since we're in price discovery, let's just do some simple Wyckoff here up here in the daily time frame. Finally getting some more candles to show you. Now, again, on a Wyckoff structure, you already broke up above your band here. You see that? You're above 419, 419. So what you'd want to do here is hold this area of 419 and you want to see this come back up. That would be your trigger. If you have the market view, Nvidia has a lot more to go. I mean, I think you're chasing pure FOMO at this point. But if you have that market view, that would be your traditional trigger in Wyckoff. You come down, retest support, pivot out. You'd want to see that in confluence with volume. You want to see that in confluence in general with the markets being bullish, okay? That would be the bullish narrative. And again, if this fails, then the bearish narrative will be this is going to form. It's already at resistance, comes back up, maybe makes a lower high or makes some type of double top, and you're back in this trading range, okay? And this trading range is 378 up to 419, and obviously you're at 429 right now. So it's positioning itself that it wants to hold the support and then pivot out to the upside. Giving you fibs and things here, guys, would be very small. Okay, these would be very small. I don't have a lot of confidence in those fibs for upsides because of where we're at here. Because we're so, I mean, you could even do, there's a double bottom structure here that you could do, but because this is such a tight on the daily, yes, you can get more candles, smaller time frame. But yeah, I mean, this is, let's see whether what you're probably at the 1618 when I add that on here, just looking at a trend based fib. 1618 is 416. So you made it above the 1618, just looking at this little double bottom structure here. So again, I would just trade this as, if you're bullish on this, I would trade this in my perspective with a trigger, but I'm not bullish on this. I think the big gains have already been had, and I think people are just chasing FOMO at this point. But that's what I'm looking at with Nvidia. If this thing wants to come down, people are asking me that as well. Let's put this on a 3 day. This is really, this is such an extended move up, okay? So if you look at this on a 3 day perspective, I mean, it depends where you want to grab your impulse from. I would think I would probably on a 3 day anyways, I'm looking at this low here on April 21st before it really accelerated. You see that? So your low here, this is where it was at 262. And if you pulled this up here to where price currently is, and again, it could go higher, you're looking at basically exiting Wyckoff at 366, your 618 at 326. If you came down to the one fib, you're at 262 from whence the pump started. And of course, if everything falls apart sooner than later or later this year, I would be looking at 158 for the 1618. People think that's impossible. This was just trading at $108 in October. Okay, $108. So it's not impossible to come back down to 158 with the turnover in the economy and the market selling off hardcore. But right now, lots of FOMO, lots of activity in this stock. Looking at this on the MFI, you're still in the bullish territory. You got a lot of, look at the momentum. Lots of momentum here in the 3 day chart. Volume is still very elevated. More, this is buying ratio, so you have more people buying than selling. So it's a very active, heavily traded stock. Not interested in it though. Palantir. Palantir, again, another one of those parabolic rises. You can see the pump up. You can see the exact hit to our 2.058 at 1710. Now, notice the difference in the character of the candles, a straight up acceleration and now kind of a soft rollover. If this 1710 continues to hold, you're going to see this roll over some, okay? And this could be your topping action. You're already seeing the rollover happen in the momentum. You need to see the rollover in the paper in the market. And you'll see that with selling. And then you have the mean reversion back down to your 21, which is a substantial drop down here. That's down at like $14. So this takes time as well. This is an 8 hour time frame on this chart, but you want to see if this curvature stays this way. If you break out above 1710, hold this as support, move up, then you have more upside. but this is really elevated after a big move. Again, another stock I think you're just chasing pure FOMO on. Looking at gold, gold is not doing anything. You're below the tide here, guys. Gold's not doing anything, bouncing off of my 486 at 1943. You're at 1958. 3-day candles just stacking them side by side. So we'll revisit this when it either breaks down or starts moving, because this is a very boring chart. Visit last video if you want to see what I'm expecting when the markets do roll over, looking for that bounce up in gold. Silver trying to hold the 2-year trend line here, same thing. Got a little bounce up, which again could just end up being a head and shoulders type pattern. If this doesn't get any more bullish and you start losing this trend line, I would expect silver to fall down. Looking for both the metals to do the GFC cycle again, which is sell off with if and when, which I do believe is a win, the market sell off. Looking at some of the mega cap tech to see if they're topping. Amazon's not doing much, still below 129, hovering at 126. So you got to look at these to see how much more upside potentially market has. MFI rolling over, bearish divergence, bearish momentum. Looking at Apple, Apple's the only one that really looks like it's moving because Tesla's on a pause, just like the Fed. 1272 is 185. You got up there. You're a little bit extended here from your trend. Apple doesn't like to stay extended very long. You can see it keeps coming back to the tide and testing the tide. So it's up here. People getting excited. It's also very defensive. You're near trend exhaustion levels. Your MFI is rolling over here. Volume's dipping down a little bit. Momentum steady. It's just wavy up and down. So Apple's an outlier. It's a huge company. Lots of people feel safe there. Nice balance sheet, new product that probably not many people will be able to afford to buy for $3,500. But it is what it is, guys. So that's Apple. Want to see if 185 holds. And again, if you start seeing this roll over a little bit, that is a new all-time high for Apple. Google, we talked about this last video. I talked, candles were up here. I told you this looks like to me it could lose its tide here. It's trend, and sure enough, it got below it, and it's in the volatility channel of the tide, and it's still in the volatility channel of the tide. So we'll see if Google is truly rolling over. It exceeded the 126 at the 1618 and promptly sold off. Looking at your indicators, again, you have bearish divergence here essentially. Look at your momentum. Momentum's turned red. So we'll see if this holds up and wants to try to push up, if the markets want to continue to rise, or if they are ready to start to roll and cap. We shall see. We're still holding up here at 44.15. Let me give you a last check off here before we get out of here. NASDAQ, 15,122. So a little bit of an update, nothing too euphoric. Big day tomorrow, guys. Watch what happens. Hope everybody has a nice long weekend. I'll probably get my video out on Monday, guys. I'll try to do it Monday. It's a holiday, so it might be Tuesday morning so we can see what the futures and everything is doing, okay? All right, everybody. Have a great weekend.